Hey, it's Andreas. I've been investing for over 10 years, and in today's video, let's take a closer look at Bauch Health Companies. Is the company in danger of bankruptcy? Well, let's find out together. There's some comments about this from time to time in the news. Here we can see from Bazinga last month, Bauch Health solvency remains a concern. And even before here in the second quarter earnings of the company, they had to comment on the solvency issues that the analysts keep pointing to. We will take a look at some of the numbers together and see what's going on here. Because if we look at the balance sheet, we can see that the company has a lot of debt indeed. 21 billion in debt, and the company only has a market cap of 2.3 billion. So the majority of its balance sheet, it's a lot of debt and very little equity. And this can be very scary. If we look at the income statement of the company, we can see that yes, revenue is growing nicely. This is largely due to Bauch and Lomb, this company that makes the lens products for the eye health. We can see that Bauch Health Companies here owns 88% of that company. So that's about 5.1 billion. And we can see that indeed the market cap here is 2.29 billion, and this reduction, this discount, so to say, is due to the large debt here. We can see that, yes, growth, as I mentioned, from Bauch and Lomb, and we can see cost of revenue is not increasing very fast, and we can see that in terms of operating income, they are profitable now. So these are good numbers, growth driven once again by Bauch and Lomb. It's the crown jewel in this asset play. And then we can see that the debt here is expensive. We can see 1.3 billion here in costs. And if we scroll down, we can see this number showing up once again on interest expense with some other debt added to it. So this is very, very costly for the company to service. However, we can see that the operating income here is covering the interest charges. But what's happening with the debt? What's going on with it? We can see that it is being reduced, and we can find out by how much in the cash flow statement. So it's clearly listed here on a quarterly basis. If we zoom out on an annual basis, we can see that when we first looked at the company together, they were in big trouble. That's why the company was very cheap, a big drop. It has not done anything since then, basically, so it's a very long waiting game. But back to more recent quarters here, we can see positive cash flow from operations. We can see that investing is costing some, so this is the development of new drugs in this case. They have some drugs coming up in phase 3 studies, and I'm quite excited about the one looking at rejuvenation for skin. That's a product I think will sell well with women, a big driver of consumption in society. And then we can see financing cash flow here. This represents repayment of debt, so we can see it's negative here. If they were to take out more loans, then this would be positive, but since they're repaying debt here, we can see that this is negative. And once again, you see on the balance sheet that the debt is being reduced, so they're paying it down. And we also know that it's expensive to service. We saw a big cost in that regard, and we're seeing that the end cash position is being reduced here. So we can see that it was it was a lot larger before, and now it's being reduced here. So not very good with regards to that. However, if they weren't amortizing, well, then end cash position would be larger now than a few quarters ago. So this is an interesting situation for the company. They are indeed dependent on the interest rates. We see what's happening now from the Fed, what they're communicating to the economy. But this is one of those companies that would benefit enormously from a reduction in interest rate by the Fed, as the debt would be cheaper to service, it would be cheaper to refinance when debt is coming to maturity. So that would be very, very positive for the company. And if they're able to pay down debt, if they're able to get these creditors to stop worrying, then we can finally see a lot of value potentially being unlocked for us as shareholders, with the potential spin-off of the skincare division Solta that would raise a lot of money. We would also potentially see a spin-off here in the ownership of Bausch and Lomb. I would like to see them just give shareholders of Bausch and Health direct ownership here in Bausch and Lomb, so that they would just give shares in this company to their loyal shareholders, just like Dell did with VMware when they spun off that company. Not quite as they did, they also paid a large dividend in that case, but just spin off the equity to the owners. I think that would unlock a lot of shareholder value. Back in the days, I had a lot of hope that Carl Icahn, one of the main investors here in Bausch and Health company, would drive this a lot faster forward. But we can see that he's caught up in his own problems with Icahn Enterprises, with the short seller report on it from Hindenburg Research, and with the recent settlement there with him using company stock as collateral for private loans. Well, if that's all behind him now, then perhaps he can go back to trying to create shareholder value, trying to push through decisions that are beneficiary for owners here, such as a spin-off of this company. It's quite a lot of value that could be unlocked for shareholders, and indeed shareholders are waiting patiently in this case. And I think that we're gonna have to do some more waiting. I think that it will not be enough just to see a reduction in interest rate now from the Fed with 50 basis points. I think that we're gonna need to see more reductions, and then also some time to pay down some debt, to do some refinancing, to get the creditors to feel comfortable again before we can see some action here in the capital structure of the company that would unlock a lot of value for its shareholders, basically. I hope you enjoyed this deep dive into Bausch Health companies. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.